All right, everybody, we are live here on BTFD. This is the Sang Lucci team, and we are doing our weekly mailbag today, okay? And this is where we answer questions that you guys send to our mailbag account. Anybody who is watching right now, go ahead and, if you do have any questions, drop them in the chat box through your streams tab on BTFD, or you can go on Twitter and just go pound Lucci mailbag, and we'll go ahead and find that for you. All right, so we're going to go ahead and just take some of these questions. First here, let's just talk real quick about how ridiculous this market is. Okay, let me show you a little screen share here. Should I show my P&L? Well, you guys already seen it. Okay, so this is just a watch list, that I'm just circling around here. And this price line, all right, this price line was up and down like 10 points maybe every hour. And I got crushed shorting price line, thinking that, again, it would dump and the weakness would go over from yesterday. If you take a look at this Google, she did. And again, I was holding these shorts, and I couldn't hold through the squeezes. If you guys take a look at the squeeze that happened on this price line, especially off the open, when it hit lows at like 1171, it ripped maybe like 10 or 11 points. I'm sitting there holding through that squeeze, and I'm like, oh my, I can't do this anymore. Took the loss, saw it tank back, came back up again. It was just a shit show. It was just an absolute nightmare. So really the only good trades today were Tesla. That was a great one, okay, and they apparently announced that I don't know, this Model E is coming out in 2015. And then there was a Netflix, which was up, by the way, like while the market was tanking, the Netflix was going higher, so that was a good one. And then your Twitter and your Facebook again. But I think even Twitter crashed out at the end of the day. No, she didn't. So yeah, Twitter ended up at 55 and change. Okay, a lot of people were trying to short that thing, including me, and we got nowhere. All right, so anybody who's shorting the market right now, realize what you're doing. It's pretty scary right now. Pretty scary. All right. So first question here from Eric Thomas. I trade on a daily basis with Tim Grittani. Do I know who the hell Tim Grittani is? Yo, guys, do we know who Tim Grittani is? Where have we heard that name before? We've definitely heard that name before.
Isn't it?
Tim Grittani. We've heard that name. Anyways, trade on a daily basis with Tim Grittani as we are more into OTCs and NASDAQs. Tim Grittani is Sykes' boy. That's Sykes' millionaire boy. That's who that is. That is who that is. Okay, we're more into OTCs and NASDAQs for now. We saw you post about pre-market Twitter shares, and we're wondering how to get them on the next hot IPO. One of my old boss's friends from Cohasset only trades pre-IPO shares, makes a killing. Wonder if you could tell us more about it and how to take advantage.
I know a guy who does only new issues too.
I mean, here's the thing. You have to have a relationship with the underwriter, okay? And the underwriter being Goldman Sachs or Morgan Stanley, okay? And those are the big underwriters. You have to have a relationship, as in you're an accredited investor with a relationship with with the underwriters, meaning you have a bank account or they are your custodian, and then you will get offered shares, all right? And you're not going to get offered a shitload of shares either.
Yeah, the way that whole game works is it's all about, there's funds out there, and this is all they do. They just play new issues. They have all the relationships they need to get all the shares that they want to get, and it's just about managing their risk in terms of getting out immediately when they're going in the tank and then letting your winners run. And whatever 3 out of 10 ends up being like, didn't LinkedIn just have to go ape shit off the when it?
Yeah, LinkedIn was a $40 pre-IPO price, opened at like 80, and then went to 120.
Right. So you get one of those, you're a big fund, and that's game over. But like it's entirely about relationships. So
yeah,
if you're just sort of your average guy, or even a good trader, it's not. It's a very difficult thing to do in scale and to do consistently. You might be able to do it once or twice, but like it's hard to do consistently.
Right. So again, for anybody who's looking to do that, I mean, have your custodian at Morgan Stanley and Goldman Sachs whip out a couple $1 million, start trading some shit, get them to like your flow, and then they'll go ahead and offer you some shares.
Yep.
Okay.
It's all about the
I tried to get one of my friends who works at Morgan Stanley to hook me up. He offered me 100 shares, guys. 100 shares of Twitter. I wanted to slap him in the face. Okay, so next question here. Let's go to John. Do you see any differences in the tape showing odd lots? If so, has this affected any big changes in your strategy? Okay, so as you guys know, or anybody who does watch tape, there has been a new rule that got released about odd lots. I'm not even sure what the specifics of the rule is, but Nanex was talking about it. A lot of other people were talking about it. I have seen the tape now show a lot of odd lots now. Previously, what used to happen is, let's say you had 50 shares, right, and you put up a bid at whatever price. They wouldn't even show you on the level 2. They wouldn't show you on the level 2. I'm not seeing them come out yet on the level 2. They might actually be coming out now on this actual level 2. I'm not quite sure, but I have seen the actual ticks go off in odd lots. Again, like we don't really know how to assess this yet because it just started showing all this. It hasn't affected us at all quite yet. It might do so in the future. We got to figure out who's really taking advantage of this particular rule. Nanex is saying it's HFT. I don't know. What do you guys think? I mean, you guys were all in here. Have you guys seen the odd lots? What do you think is going on here? So while you guys talk about that, we'll move on to Chad's question here. And we'll say, I have heard and don't know if this is true or not. I know there's level 1. There's a level 2, and then there's a level 3, okay, that only market makers get to see. Is this true, and if so, what is the difference between level 2 and level 3? Again, depending on your broker, depending on, you know, the level of your broker, the sophistication of your broker, and how many relationships that your broker has with all the different exchanges and routes, that's going to affect what you can see on your level 2. So my level 2, I get access to a lot more different exchanges and routes than, let's say, the retail brokerage does, okay? But it's still level 2. A level 3 is obviously one step up. You know, they say that at level 3 you get access to dark pools and things like that. But again, it's all about your broker, okay? So you have to go and do the research on your broker to see how, you know, deep into the routing and matching engine sort of game that you know, some of these other sophisticated brokers are with as well.
Plus, doesn't your account have to have a designation, like a market maker designation? Like
just to get a level 3?
Could a customer, could customer or customer pro get a level 3?
I mean, I haven't heard of it. I haven't heard of it.
Yeah, I don't think I've ever heard of that either. I mean, I'm certainly not an expert in this, but I think, you know, when you guys trade, you are designated as a certain type of trader, you know, customer pro, stuff like that. And I'm pretty sure that to get a level 3, you can't be designated as a customer.
Indeed, indeed. So let's keep going here. Let's go to EB. Has a question about basic tape reading. For a long and short position, what are 3 key things you are looking for on the tape? Should we tell this guy to pay me some money?
We give away all this. We give away free all the time.
Should we tell him?
You can get it all in the book too.
Should we give him
Options Made Simple?
Just a watered down garbage response? Okay, so what are the 3 things you're looking for on the tape? Higher size, one way of the offer, bidder ask, blah, 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 level 2 price action, to help assist in a directional play. Well, ideally, again, you're trying to, again, like tape, I'm going to just answer this with one thing, all right? So the tape is about theorizing the type of action that you're looking at. So if you can now look at the action and say, okay, this is aggressive buying. This is people that want in to the stock and they want in now. You know, they don't want to wait to get their limit orders filled. The same thing on the sell side. They don't want to wait to get limit sells filled. They just want to sell on the bid right now. These are the dynamics that you're looking for a directional play. You can see that on Tesla today if you took a look at the tape after like 1 o'clock. Second part, how can you determine on the time of sales if it was a buyer or seller transacted at that price? Again, like that's the big issue with time and sales for everybody, okay? For everybody. And Hedge has a thing on level 3. We'll go back to that thing in a second. So that's the issue for retail traders with tape. They'll look at a transaction. Here, guys, here, hang on. They'll look at a transaction similar to the one that you're seeing right here. Okay, they'll look at this transaction right here, and they'll say, okay, well, was this a buyer or was this a seller? Was this, you know, did somebody sell here? Did somebody buy here? What you guys, a lot of you guys fail to realize is that there is a seller and a buyer in every single transaction. Remember, if I'm buying shares, I got to buy from somebody. Who the hell am I buying it from unless I'm buying it from somebody? So again, it's not about understanding, is this a buy order or is this a sell order? Okay, the idea is about understanding where that transaction took place. Okay, without trying to tell you too much here, that's what you're looking for. Okay, and then last part here. This guy's pretty greedy. What do you use to set an entry and exit price point on a position? I feel like I'm just going with my gut most of the time, but I want to have some quantitative support. I mean, if you want quant support, you can go ahead and use your technicals and things like that. Me, I mean, again, I'm using my gut too. So my gut might have a little bit more experience than your gut, and that's really all. That's really all it is.
Well, your gut is linked to the tape too.
Right. So essentially, if I'm looking at a particular tape and it's telling me, okay, I got some aggressive buying, then I'm on that tape until I figure out, like, okay, that buying stopped, or my buyer disappeared, or whoever was chewing up the stock is gone. So at that point, I got to reassess and say, okay, do I want to hold through the pullback, or should I take the profits off the table now? So I use the tape unequivocally for entries, exits, holding through stuff, you name it. I use it all for that. All right, so we got at DJ Cool for real. What is your outlook on Apple, and what indicators do you use for scalping? Okay, outlook on Apple is that she's bullish. Eventually, she'll break this range that she's been in, 560 to 570, and you'll get a pretty big up move. The problem is, though, she's not going to make it easy. Remember, everybody else is looking for this move too. So just like the Google, the Netflix, the Amazon, the Priceline, like these things have been trading in a horrible range, screwing people left and right, no matter what, shorts, longs, whatever. Apple is doing the same thing too, and I think what she's going to do is burn all the longs. She's going to make everybody panic, and that's when you're going to see that rip. All right, that's what I would say to look out for. The problem is, if you get in too early on that long position, you're going to buy an option that goes down 50%, possibly even 75% in value. So be careful. What indicators do you use for scalping? Tape. Okay.
Got one from Twitter. We should answer
Which one?
You got a question on Twitter?
Do we?
Yeah. Go to.
Okay. This one? That's the same guy.
Oh, same dude. All right. My bad.
Yeah, same guy. Okay. Look, we got one from Johnny Trades here. Muckbear is saying, did we do a shot of Jameson today? That's not me, man. That's Weiner, man.
Weiner loves his J-Mo.
Weiner, it's like he's an honorary Indian guy, man. That's all we drink, too. All right, so we got at Johnny Trades 1 on Twitter. What do you think of the outperformance in the small cap RUT in reference to the SPX and DIA? Considering the fact that I have never looked at RUT in my entire life, I shall defer to somebody who actually gives a shit. Anybody give a shit about Russell? He's talking about, obviously, the small cap names, the Russell index here. So, what's that? Oh, here we go. We got Peter Zhang.
In general, guys,
Peter Zhang wants to talk about this.
In a bull market, in general, the Russell will always have little funky pops in general because it is the land of pump and dumps and it is the land of low float stocks. So in bull markets, obviously you'll see that, and as you'll know, that a lot of Momo players will be doing really well in the $2, $5, $10 stocks, and that's just part of it. That's also something you can also refer to kind of give you a tell that we are still in a relative bull market and doing okay. If you guys want to play in that land, be careful. It's really light volume. It's probably freaking dangerous.
He just got a haircut. You see, he's looking stylish. All right, hedging Neanderthalism. Yo, you got to change that name, man. It's too long for me. This service, he's talking about the level 3. This service is restricted to NASD member firms that function as registered market makers. Okay. Level 3 allows you to enter bid-ask quotes as the trades are being executed right in front of you. Fastest way to execute a trade, and it's typically found only on the trading floors of brokerage firms and market makers. Okay, so to sum up that one, retail traders, guys who use Fidelity accounts and Scottrade, you're not going to get access to a level 3 here.
Yeah, level 3 is like the market maker book.
Market maker.
In the OTC land, they call it pink links. I don't know what they call the actual level 3 over in higher lands, but you're talking about you get to see real market maker positions when it actually mattered back in the day.
Right, right. Okay, and then we have a question here from Q. I'm pretty sure this is our boy Q, depending on the type of questions. Options exchanges recently amended their rules to establish a 50-cent strike program that allows the exchanges to list 50-cent strikes beginning at $1 and up through and including 3.5. Most recently, banks have been added this program on a weekly basis. So the banks added it, and then you have Apple now with the 2.5 strike. Did you want to say something on this?
Yeah, in general, I think any type of micronizing of options is definitely the direction that a lot of people want to go towards. You know, Apple, again, like Lucci was saying, is the first example of 2.5 strikes. And when that happens, obviously it's in efforts to pull more people in. They want more volume. And so, especially in the banks, if they started releasing those, it would bring back the game for a lot of market makers, just hand market makers, because there's a lot more dumb flow that wants to play, say, on Fridays, because it's 2.25 or 2.5 strikes. But in general, I think that is the direction. You know, you get your weekly options that release every week now, you know, even 5 weeks ahead of time, and then getting your quarter strikes, half strikes, all that. It's all going to start rolling out. Right. Eventually, it's just going to be little tight little markets. It's going to look just like the stock market eventually over to the weekly options and just options in general.
Right. Now you're just getting a huge snowball effect of all the different products that are being offered. Remember, 3 years ago, before they came out with the weekly options, there was only monthlies. You know, there was only monthlies, and the market moved in a certain way too. I feel like as soon as the weeklies came out, you know, stuff got a lot more volatile. Stuff got a lot quicker. You know, Apple and Priceline, these things would rip, you know, 20, 30, 40 points in a day, literally in one day. And then there became a lot more game for the market makers. And again, that's what I believe the creation of these products is really pushing the edge more towards the market makers and the smarter money, and the retail guy is just really getting rolled over by a lot of these programs. You guys remember the mini options? Okay, and then they came out with the jumbo options. All right, that one actually failed because there's no volume in the minis and there's no volume in the monthlies. I'll even show you guys right here, just so you guys do get an idea of what it looks like. What do we got? What do we got? What do we got? Or not? Yeah, I don't know what this thing. Oh, here we go. Okay, so let's just take a look at an Apple one. Okay, now you see these ones that are designated as 7, that's going to be your minis, okay? Now there's also jumbos, that they're going to be designated by, I believe it's by a J, okay? So now look at the 550 puts on this Apple, or take a look at something that was closer to the money. So you see the volume here. Look at the volume on this 560 put, you get 24,000. You take a look at the call side, you got 19,000. And now look at the look at the mini. Look at the mini. You only got 179 open interest and then 28 contracts that were traded today, right? So nobody is playing these things. Nobody in their right mind would. Why? Because the pricing of these things, they messed up on the pricing of these things. And now they were hoping for liquidity to come in, and there's none of it there. There's none of it there whatsoever. So the mini options were a failure. The jumbos were a failure. This strike program, though, the 50 cent, the half strikes, and all that kind of stuff, I think that's going to do pretty well. Because again, you think about the mind of the retail guy, you know, they're going to be the ones that are pushing flow towards that. Obviously, you'll still have the most volume in the double zeros and you know, in the same strikes that we usually had it. But you know, to me, these are more products that smart money can use to jam it up your the backside. And Q wanted to follow up and say, will the industry bring down to nickel strike programs or a quarter strike programs? Personally, I would hate to see that. I would literally hate to see that because it's too much clutter, and again, it's too much game. It's too much. There's so much in the way of sort of gaming, manipulation, and all that kind of stuff. You know, they can really use these tools against us, you know, the retail guys, to figure out what's going on in a particular stock. You know, so I don't like to see any of this stuff. Frankly, I can't believe we're looking at 2.5 strikes on that Apple either. But it is what it is. It is what it is. Guest is saying, let's see, guest 410, you use time and sales or level 2 for tape reading. Well, they're both the same thing. They're essentially, tape is the combination of both, okay? So when you're looking at a level 2 and a time and sales, for example, like we're looking at here, I'm looking at bid and ask, okay? I'm looking at bid and ask, and then I'm looking at where the transaction goes off, okay? So, you know, depending on the flow of bid and ask, depending on how, my bids move, depending on how my offers move, where is supply and demand here? And then where are the transactions going off, are people motivated to get in? Are people motivated to get out? Are people not motivated to do anything? Is there no, is there no rationality going on here? So I'm using both in conjunction to come up with, ideas, to come up with, possible trading opportunities and all kinds of stuff. Okay, and I think that's about it. Anybody have any other questions before we close it up? Do we have any other thing that you want to throw out here? That's it. We're boring. It's December. Winter vacation's coming around.
It's dark at like 4:30 in New York.
It's dark.
All we do is just sit around and play video games.
Video games. And that's really it.
Look out for the Christmas specials, guys.
We're trying to close it all up. Peter in the back is saying, we're launching a bunch of Christmas specials for the classes. So, if you guys did want to get into any of those things, and that was it. Scott, we do have a couple more questions here. We do have a couple more questions that we'll take. We have one from Scott R. Ben, who, by the way, is now a member of the basic chat here. Have you ever thought about selling credit spreads rather than naked options? Is he serious?
I think it's a rhetorical
Scott,
question.
you know what? Listen, tomorrow when you get into the chat, I'm going to ban you for like 20 minutes, all right? You're going to have to just suffer it, all right? Obviously, I thought about it, damn it, and obviously we've done it. We do it all the time. And again, you want to sell your spreads versus selling naked because, it does cap your risk. And it does save your ass in case anything bad happens.
We're not really about capping risk.
Yeah, that I'm a risky motherfucker, man. I gotta play, man. I gotta play. So absolutely. The margin here, depending on if you have the capital account to do so, I like to trade. I like to sell naked simply because, like, I am sitting there watching the tape. I am a product of my price. Okay. So if I'm there watching it every second. Granted, unless I'm being stupid and ignorant about my trading, I know when to get in and I know when to get out. I know when to mitigate my risk by dumping my position and things like that. Obviously, I do make mistakes sometimes, and that's kind of the gist of it. But absolutely, I mean, for any retail accounts that you just have anywhere from $5,000 to $50,000, you should be selling credit spreads, okay? And then they won't even let you do naked options anyway.
Yeah, that's actually what he said to his credit up here. There is more bang for your margin buck, I feel.
Right.
Thanks for the chat service. It's paid for itself many times over, right?
All this Google's. Yeah.
Thanks, Scott.
Cool. And now we got Richard Flores, who, by the way, is a photographer. He's gonna come and do my New Year's party.
If you guys need a photographer, look at Richard D. Flores on Twitter. He's the man.
Yes, and he's saying, Lucci, can you explain open interest and how it affects the price of option and the option volume? Yeah. So open interest, just to sort of explain it in the easiest way here, is that when you buy a stock, you only have two options, right? You buy or sell. When you buy an option, it's a little bit different. There's four options here. You buy to open, you can sell to open, you can buy to close, and then you can sell to close. Okay. Now retail money is only interested in buy to open and sell to close. Okay, because they're going long an option and then trying to sell it at a higher price. Okay, so let's just pull over just one of these regular options here. Let's take this Tesla put. Okay, so here's an example of a particular option. What would happen here is that retail traders, they're going to buy something. Let's say they buy at 95. Okay, and let's say they're long at 95. They need this option to go higher in value to to make any money. So they want to sell at 130, $4, whatever the hell it is. Now, if you're writing an option, it's the converse. Okay. Now, in order to write an option, you're going to send what's called as a sell to open order. All right. Now, sell to open and buy to open. Anything that's open at the end of the day, okay, whatever is the aggregate amount, that gets added to your open interest calculation at the end of the day. So if you go back over here to what is this? Here we go. So if we go back over here to this thing, okay, you can see open interest here is 9,000 at the end of today. Okay, and the trading has already ended. Tomorrow, this number is going to adjust for all the leftover open contracts, whether they're whether they're shorts, or whether they're longs. Okay, so this number is going to go up essentially, or it could go down. Okay, if the majority of these were closed out. Okay, so all they're going to do is adjust here for open and close. So anything that's being closed is going to lessen this amount, and anything that's being open is going to increase this amount. All right, so now as far as how does it affect the price of the option and the options volume? Well, if more people are interested in a particular option, you could say obviously that there's more interest there, so it's going to be at a higher price. I mean, you could make that case, but again, you know, for me, I don't like to look at open interest, because for me, it's like if there's too many people in the trade, then I'm like, they're going to make them all expire worthless, and then the move is going to happen after those guys expire worthless. I mean, that's essentially how I look at it. You know, sometimes it doesn't happen like that, but
there's a strategy around that too. Actually, a lot of people use open interest to bracket in the actual price of the stock.
What do you mean?
And so, like open interest, the highest open interest puts, the highest open interest calls.
Right.
Can actually give you the actual bracket.
Oh, you mean the range?
The range for the stock, actually, because market makers are all trying to clean out all those open interest guys.
Exactly.
Close to market. Market profiling actually maps very closely onto open interest.
Yeah. I feel like it's similar to market profiling and unlimited.
Cool. And here it's saying, how much would you charge to meet? I just listened to your webinar and caught on to something you said about level 3. Send me a message. This guy's at Penny Winners. How much would we charge to meet?
We've talked about that, having people come in. We've talked about a $10,000.
Shit, how much would you guys pay to see me? You know, that's really the question.
To see you?
It's
overrated
now.
It's overrated. We've talked about doing like a $10,000 2-day thing where people would actually be here. But, you know, we live and work here, you know, so it's like pretty sacred space for us to have people come in and trade alongside us. We usually try and keep this only people we're actually working with.
True, and I hate when people are next to me.
He just doesn't like people in general.
You know, if you're a real trader and somebody stands behind you, then that man needs to be shot. He needs to be shot and taken out, and just somebody needs to do something with him. All right, because that's just something you don't do.
Your friend came over here when you were about to look at that trade. He's like, "You about to put a trade on?" And you're like, "No, I'm not." That Indian guy, the one who was injured. Yeah, I was like, oh God, you don't even want to ask if you're putting up a trade on right now.
This is a good question. Do you ever plan to teach just tape reading compared to the entire course? Yes, we do. It's in the works. Hopefully, in the first couple months of 2014, we're gonna do that.
Right. Okay. Yeah, and that's going to be a very advanced course where we're going to start laying into a lot of like the nuances of tape and how it relates to tape of your option as well. So we're looking forward to pushing that out too. All right, guys. So that's about it here. Stay tuned for you know, some of the deals that we're going to have during the Christmas vacation. Jay Finn is saying 10 grand to see me. That's 10 grand. 10 grand. That's not bad. 10 grand.
He's saying 10K to see you at Sang Lucci chill out with the ego.
Yeah, I left out that part. Just took the 10 grand. I want to see 10 grand. All right, guys. Enjoy your evenings, everybody. We'll see you next Thursday on the Sang Lucci Mailbag.
See you guys. Thanks for joining.